One of the number one things that I get asked is, how does my FICO score impact my interest rate? And here's the cool thing. It's public information. You can literally see it right on Google, and I'm going to show you. So take a look at this. Pull up Google. What you're going to do is type in Fannie Mae LLPA. That stands for Loan Level Price Adjustments, and it's going to show you way too much information than you need, but it's going to specifically answer the question about credit score and what it's going to do to your interest rate. And this comes directly from Fannie and Freddie, because keep in mind, they're the ones that lend the money to the banks. So when you pull this up and you scroll down to page number 2, you're going to find the charts that show you, first you're going to see this column here. These are all the interest rate tiers when it comes to conventional financing. So you'll notice that a 740 is the top tier. It doesn't matter if you have an 800, an 850, or a 740, it's the top tier that you can be in. The second tier is going to be the 720 to the 739. The third tier, 700 to 719, and so forth. So the first thing that it's going to look at is, what tier are you in when it comes to FICO score? The next thing is, what is your down payment? I always joke with people where it's like, hey, I can get you the best interest rate. I can get you a 0% interest rate. You just have to put 100% down. Haha, obviously that means you're not financing anything. But if you put 5% down, you would be in this category here, because 5% down means that you're financing 95% of the home's value, which is what the lender cares about. How much are we actually lending you based on what the asset is worth? So if you're putting 5% down and you're in the top tier, there's going to be a small 0.25 percentage on the interest rate as an adjustment. Now, if you're in the second tier, look how that adjustment increases, and the third tier, and so forth. But take a look at this. Most people think that if you put 20% down and you have an 800 FICO score, that's the best tier, but it's not. That's like 2014 news. It's actually, the banks can't charge you private mortgage insurance, and they don't like that. You're not going to get the best interest rate until you put 40% down and you have an 800 FICO score, which is kind of crazy, because putting that much money down on an asset that doesn't have compound interest and you lose financial leverage, that's a whole nother conversation. It might not be the smartest bang for your buck, because ultimately, if you have your money invested in a conservative account and that money is earning compound interest, that snowball grows bigger, you'll have compound interest in real estate. But this is just part of the myth busters that's out there, that the old news of 20% down and an 800 FICO score, that's not the best rate possible anymore. You have to look at these adjustments. You have to also look at, are you buying a second home or an investment property? Or is this a refinance? Those tiers and the adjustments are different. And that is behind the curtain when it comes to mortgage interest rates. So now you know.